Hello everyone, welcome back to the channel. My name is Asmita and yet I'm back with a new topic for today. So today's topic that we'll be discussing is credit management. Before going ahead with this topic, I just want to let you all know that if you're interested in learning project management, then there is a wonderful book for you. Do check for the link in the description. Also, there are several videos related to that topic on this channel. Credit management is a process in which credit is granted. The term according to which it is granted is set. The credit is recovered when it is found due, and all other credit related matters. The aim of a bank or a company that deals with the controlling of credit is to ensure or improve the profit and revenues by promoting sale and also reducing the financial risks. You must be thinking about who is the one who handles all these credit related matters. So the answer is a person who is hired by an organization who is also known as credit manager to manage the credit department and also to make necessary decisions regarding the credit limits, level of risks that can be faced, term of payments and various enforcement action with their customers. The roles and the responsibility of credit manager varies with the scope. Let's now discuss the functions they perform, and they are controlling the worst debt expense and exposed through direct management of credit terms on the organization ledger. Ensuring sufficient allowance of suspicious account is kept by the company. Maintaining a strong cash flow through collection in an efficient manner. The efficiency of cash flow is measured using several methods, such as days sales outstanding, also known as DSO, and lot more are there. Fourth one, monitoring the account receivable portfolios for latest trends and dangerous and the warning signs. Fifth one, creating a credit limit. Six, setting the criteria for credit ratings. Seventh one, remove the bad debts from the company's ledger. Eighth one, take legal action for the ones who didn't pay the debt. Ninth one, enforce the stop list of goods and supply to the customer. Setting and ensuring compliances with the corporate credit policies. When we go forward with the action plan, we are aware of the benefit it carries. So there will be a fruitful outcome in the end. Similarly, credit management also have some benefit. So let's discuss them now. The main benefit of credit management is that it gives a clear picture of company finances as to avoid unnecessary issues regarding credit and risks associated with it. Second, cash flow protection. This deals with ensure that the cash inflows are always higher than the cash outflows so that the bills can be paid on time and also the salary to employees can be provided on time. Third one, reducing the number of late payments by knowing about them earlier and preventing bad debts. As a result, reducing the possibility that everything worse can impact the business. Fourth one, increasing the available business liquidity. Fifth one, executing quicker and more complete recovery of the debt. Sixth, improve the company's day sales outstanding. Seventh one, identifying the proper opportunities and freeing up the company's working capital for critical business investment will help with the growth of the company. Eighth one, helps in the planning and preparing the final budget for the future. Ninth one, reassuring potential leaders who will support and invest in the business expansion plan. Have you ever faced any difficulty in having a bad loan or debt? Tell us in the comment section below. Every action needs a strategy to work efficiently and effectively. So credit management also needs some strategy for its efficient working. Let's discuss the strategy of credit management. First strategy is to define the credit management process. First, the credit management practice and services are taken into account. If the credit management process is still not on the track, then here are the solutions you can implement. First one, calculate the average day sales outstanding and have a comparative analysis with the industry. Second, have a check whether the payment to suppliers was done earlier than the payment received. If this is happening, then start adjusting your bill cycle and payment terms. Third one, maintain a healthy diversification in the customer's portfolio. Second one, client creditworthiness must be established. Keep a check on which customer or client can be asset for a company and which one can be liabilities for the company. Identify and study the risks of defaulting on the payments by making a proactive credit risk mitigation plan. Third one, Support credit and debit management with accurate documentation. When a contract is signed with customer, there are few points that you should remember. The contract should include the delivery and the payment option, and the condition and explain any provision in the contract. Keep a lawyer to review the condition of the contract. The procedure of payment of the client must be cleared. Ensure that the invoice is addressed to the right contact person and the company. Fourth one, the client's payment process must be monitored properly. This should be done to make sure that they are agreeing with the contract agreement and can also help to avoid the unpleasant situation. I hope today's video will help you to gain some knowledge about credit management and its importance. To know more about this topic and project management, subscribe to our channel for new videos daily. Thank you for watching this video.